Identifying high probability setups in forex. This could be like a really tough thing to do for some people, but I'm gonna get into it right now and show you guys how you can identify high probability setups yourself when you're trading forex or really any other market. First and foremost, you guys want to make your own probabilities essentially, right? So let me just quickly show you guys an example. So you're gonna figure this out as time goes on, what works better for you and what doesn't, right? So I'm giving you guys an example of what I use as confluences in trading. Like I said, everybody's confluences are going to be different. You have to understand that just by simply trading more. Okay, so my formula, where's price trading, where the trend in the market is currently at, so looking at the higher time frames, where is the moving average, what do the higher time frames look like, right? And then obviously hypothesis, all this stuff, we can go into this stuff all day long, but I'm talking about confluences. So 1 to 2 of these confluences is lower probability, most likely not taking the trade. 3 to 4 is going to be medium probability, it's 50-50, it's probably going to be about 1% risk. And then 4 to 5 is considered a high probability trade, and we're going to probably risk 2 to 3% that trade. So here are all my probabilities for the most part. We have the trend, right? So if it's in line with the trend, we're going to that's obviously a confluence. We have candlestick patterns because that's what I trade. That's my entries, right? Moving averages, so where the moving averages are, where's the RSI on the chart, the supply and demand or support resistance. We have rejections, we have break of structure. So let's say we're trading on the 30-minute and the weekly, the 4-hour, and the daily are all bullish, and we're bearish on the 30-minute. Let's say we have a break of structure on the 30-minute from bearish to bullish. That would be a confluence for me. We have retest, and then we have market structure. So retesting back to the market structure. Break of structure with a candlestick pattern to the upside and instead of supply and demand zone, right? That's already an A+ setup. So let me just show you guys some of my setups from this week, and I'll just show you guys how you can find this, right? So obviously when you first start trading, you're gonna have to look at these confluences a lot, just to get the habit of it, and then as the trading goes on, you'll see what works and what doesn't work. Okay, so always have this stuff written out as well. So we're on the 4-hour right now. We have the weekly's bearish, the daily's bearish, the 4 hours bearish. So it's already a confluence because all of our high time frames are in correlation, right? So you have this 4-hour area of interest. If you have no clue what an area of interest is, go check out my other video explaining what area of interests are and how to find them. But yeah, so my overall view is that we're going to retest back up to this area of interest to then drop to the downside because we're retesting an area that has been tested multiple times and rejected or used as support, right? To continue going higher or to push lower. So we can come back up in this area of interest to then sell to this area of interest down here on the 4-hour. But as we go down to the 30-minute, we have some support and we have this, right? So we can potentially see a push up to this 30-minute support, and if we see a clear rejection, you could take it. But the reason I have closed below is because we have not closed below this area yet on the 30-minute. So if we end up not retesting and just going lower and closing below, I'll probably take that setup back down to this area of interest or a different support area that's on the 30-minute, since we're trading a 30-minute time frame, right? But what are the confluences of this trade, right? So let's just go with number 1. Our moving average is above price. So that's going to be our first thing. Moving average above price. Okay, next. What else do we have here? We have, I'm not even going to look at the other time frames, but let's just check if we are bearish right now on this time frame, which we're not bearish, we're bullish, so that wouldn't be a confluence. RSI isn't too high. Okay, what did I just do? Okay. There. RSI isn't that high, so that wouldn't be anything. Area of support right here would be a thing because we're rejecting. We haven't really closed below this yet, so I still probably wouldn't even put that in there. Hold on. This down here would be a break of structure once it closes below. Now, obviously, we're trending to the downside overall, right? We're making a move to the downside, which is in confluence with the rest. So I'm not going to put that since we're still bullish, but I'm going to play it as, let's just pretend that the price closed below here, right? If price closed below here, what are our confluences? Moving average still is going to be above price. We're going to have a break of structure, right? So we're bullish right now. We're having a break of structure, which means that 30-minute will be bearish, and that will be aligned with our 4-hour daily and weekly. It's the break of structure. We're also obviously going to have probably a bearish engulfing or a bearish variation. Let's just say bearish variation, because that is our entry point. So that is already 3, right? So that's already a medium probability trade on the 30-minute. That's pretty solid. But let's keep looking if there's anything else. So do we have market structure? No. We don't have a retest. Trend just... Okay, yeah, trend. In line with the trend. But that's really all I see right now. Because the RSI is kind of low. Alright, that's 4. That is still medium probability, so we would be risking medium, right? On that trade. Now let's go to the 4-hour and let's see if price comes back up to this area, what are our confluences, right? So if price moves back up, we're still going to be below the moving average. So moving average above price, because you do not want to be taking a trade if we are not hitting this and rejecting. So we're also probably going to have a bearish engulfing. That's 2. We're going to have a retest, because it's obviously a retest of an area of interest. So retest. And then we're also going to have an area of interest or a supply and demand zone, right? Okay, that's 4. What else we got here? The trend. Trend's moving downward, right? And we're quite a bit bearish. I think we'll actually switch bullish once we pass this, just because this was kind of a retest, but okay, I'm not going to put that down there. Moving average, RSI is low. Market structure, no, it's not really market structure at all. It's trending downside. Well, we can also put that all of our time frames are the same. All time frames in correlation. There we go. All time frames in correlation. All right, so that would be a 5th one right there. So that would be an A setup. Usually I risk between 2 and 3% when I'm doing swing trades anyways. So if I were to take it on the 4-hour, it would be between 2 and 3% anyways. So yeah, that would have been an A+ setup. As long as we're still holding that moving average, we'll be pretty good. But yet again, it's very possible that we stay between here, and if we can close below this close below signal, right, we can look to go lower and have our, so let's just say it's like this. Stop loss can either be like this, right, and you could be targeting this area of interest for that 4.05, or you can have your stop loss above these highs right here, because then we'd be sweeping this moving average and switching back bullish to then stop out for a 1.96. Well, you guys have to understand that's still very, very good risk to reward, especially if you are trading on a prop firm, anything like that. You want a higher win rate. So just making sure that your stop loss is at a point where you're 100% wrong if it stops you out is crucial, because if you go down here, it's at 100% probability that you're wrong, right, on the overall trend. So if you just give yourself some more leeway, and let's just say price ends up sweeping and closing above this moving average, and we have that sweep, then you can just stop your loss there. You don't have to actually ride out to your stop loss, but you still want enough room for price to fluctuate, which obviously sometimes it would be good to probably put it right here, because then if we close above here, that's a change of structure and we start to push back to the upside. And then that's when we start to push towards the area of interest, right? So we want to watch out for that. Another thing that can definitely happen is having this push to the upside, retest this support to push back to the upside again, then sell off that area of interest. But anything can really happen, you know. But yeah, that's how I find my confluences, and I would suggest you guys to kind of try it out as well for yourself. You can use my confluences here. They work pretty well. Had no problem with them at all. Or then you can just kind of go and back test a little bit and see how those confluences tie together to each other. And obviously, as you trade more, you'll see what works better than the other ones, and you'll eliminate some, you'll add some, whatever it is. But yeah, obviously you want to have B or A setups only. You don't want to have one with 1 to 2 confluences, because then at that point it's extremely risky. And you'll get to the point where you don't even have to mark all this stuff down on your chart. You'll just have it in your head. You'll just know if it's a good setup or not. Damn it. I hope this video is very informative to you guys. I just showed you guys one pair just to show you guys the overall gist of what confluence trading is and how you identify higher probability trades compared to non-high probability trades. So hope you guys enjoyed this video, and I'll talk to you guys in the next one. Hit that sub button if you enjoy this educational content, and I'll see you guys for more soon. Peace out.